Hello, everyone. Welcome to a brand new podcast known as Bitcoin Morning Grief, at least my morning here in Asia. At least that's what everyone's been calling it lately every time the Bitcoin price drops. Um, okay, so we got a lot to cover. I'm supposed to be at the Tony Robbins conference for the day number two. Day number two started like an hour ago. The damn thing is like 30 minutes away from the apartment that I'm staying at. I'm not in a rush to get there. I'll get there after traffic. I can talk about Tony Robbins' conference like on another video. Maybe I'll do an interview with someone that's like, a super Tony Robbins fan. There is some good, but anyway, for me, I don't know. It doesn't like. Anyway, we'll talk about that, right? On a different video because I know everyone wants to talk about Bitcoin. So we'll deal with Tony Robbins after. All right, let's go straight to the charts, and then we're gonna talk about. So here's the plan for this video. All right, we're gonna talk about the Bitcoin charts because everybody wants to know that first. And then I'm gonna talk about a couple of haters, but in a different way. There was already a couple of things I'm walking away with from Tony Robbins. I need to complain less. Yes, I know. I know you've all been telling me, but that's okay. I guess I'll listen to Tony Robbins when he says it, right? So I need to complain less. B, I need to be, happier about the haters and spin it into a positive light. So I guess those were my two best takeaways on this whole, on my experience over there. I didn't stick around for the fire walk. I just couldn't deal with 15,000 people. It was just, it was too much for me. This is why my seminars are only 20 people. And speaking of my seminars and those that hate the fact that I show my seminars, but guess what? Since people are like texting me individually to ask me questions, I can't answer everyone. So if you want answers to your questions, this is where you get them, by attending a seminar. Because I'm not even doing like hourly consulting anymore. I just don't have the time. So therefore, everything is going to be funneled into the seminars. LA is sold out. If you are on a wait list or you promised you would pay, you need to hurry up because otherwise your seat will go away. Washington is and New York are starting out. Oh man, where's my coffee? All right, let's go to the charts and then we'll go to let's go straight to the charts. No, normally I bullshit for a little while, but we're going straight to the charts. Weekly. Still bearish. It's been bearish for a third week in a row, and it remains bearish. This is a very ugly week. What did I say yesterday? Yesterday, when we were over $1,000 higher, probably $1,500 higher, I had said right now we are working on a lower weekly close, which is bearish. If we end up with a lower weekly low and a lower weekly close, because the prior weekly close was all the way at 11,500. And the prior weekly low was 9,200. I said, if we close below 11,500, but we intra-week, we stay above 9,200, that's just bearish, okay? Okay, sorry, I just got distracted by Brian's comment because he left it with a very generous tip. So let me just finish this train of thought, and then I'm going to immediately jump onto your questions. Anyway, so what I said was, if this week, if this week stays above 9,200, but closes below 11,500, that's bearish. So expect the price to keep going lower. If we go intra-week below 9,200, and close below 11,500, that's very bearish. And if the worst case scenario happens, which is we go below 9,200 and close the week below 9,200, that is very ugly. Very, very, very ugly. And right now, that is the most likely scenario going into Sunday. Now, you still have plenty of time until Sunday to rebound. But right now, I always have to assume that the way the current candle looks is the way the candle is going to close, especially when more than half the week has gone by. So the probability is with the fact that this is exactly how Sunday will end. And this is not a reversal candle. And according to the time indicator, you're only on a 4. So you are potentially looking at statistically 5 more weeks of downside. Now, we are now so close to my optimal reversal point of 7,500. But guess what? If we're breaking below 7,500 next week or the week after, I'm going to have to start calling lower targets. Now, what the tone-based haters are going to say in 3 months from now, if Bitcoin goes all the way to $3,000 or lower, they're all going to say how Tone called the $7,500 bottom and how he was wrong. Well, you have to understand that 7,500 was my low target once I realized that this was a bull trap that I got caught in. The reason why I got caught in this bull trap is because it's a bull trap. Now, some savvy traders were able to recognize this bull trap as a bull trap. Okay, please go back to my video with Ven Zhen. Ven Zhen actually explains how he did not get caught in that bull trap. And unfortunately, the method that he used for it is the method that I hate the most in trading. So, I mean, I'm already scheduling, like a whole week with Ven Zhen next year, and maybe we'll bring you more videos, or maybe I'll bring them on again, like in another video remotely. But please go back and watch this video where we literally discuss it. And I asked him a question. I'm like, and Bitcoin was like at 10, 11,000 then. It's only a few days ago. It's 1 week ago. And I said, hey, do you see any kind of a scenario where we do not hit 7,500 on the downside? And he said no. He had 100% confidence we're going to 7,500, and so did I. And when he was asked during QA, how soon do you think we can hit 7,500? He literally said tomorrow. So not only was he confident that we were going to hit 7,500, he was confident we were going to imminently hit 7,500. He was more confident than me how quickly we were going to hit 7,500. Okay. And we're almost there. We're almost there. And this isn't about, look, I want to be right, right? I'm not profiting from this move. I'm losing a lot of money here because I'm a long-term Bitcoin holder. I did not sell all my Bitcoin at 7,500 on the upside, like the trolls say. You don't have to believe me, but I never did. I sold, some Bitcoin once it started to hit 10,000. Only, you know what? If I'm going to pay my bills, let me pay my bills, 3 months ahead or something, right? But I did not I don't trade Bitcoin. And I'm going to talk about my traditional trading. Actually, I have a screenshot for you guys. I'm not going to be buying this dip because I have nothing to buy the dip with. I have no fiat, guys. I have no fiat. It doesn't matter how low Bitcoin goes. Bitcoin can go to $1,000. I can try and convince my family members to buy some Bitcoin, but they haven't bought any Bitcoin yet. Why the hell would they buy Bitcoin after it falls 90%? It's going to be back to the same thing. It was in a bubble. So anyway, let's get back to the chart. So ever since getting out of this bull trap and starting to go down, so ever since around this red line, or even higher, like around this area, this is where this triangle was forming. And this triangle started giving me my targets of 7,500. And then this triangle was forming. And ever since then, I was on the 7,500 call. This has nothing to do with fundamentals. This has nothing to do with Wall Street. This has nothing to do with the news out of India. I'm not even sure what that news was. I haven't even had time to read a single article about India. And this is why I say when you are a technical analyst, when you are a technical trader, news doesn't matter because news will swing in the direction of technicals, in my view. You cannot predict the news. Unless you have some kind of an insider information that you get the news first, by the time the news hits, it's too late. And news will affect your trading 50-50. But technical analysis gives you an advantage. Even if it's a 1% advantage, it's an advantage, which is why people make fun of me. Oh, Tone doesn't even know what the hell is going on in Bitcoin. I don't have to know what's going on in Bitcoin, okay? I just have to look at the chart. And as long as I can read the chart and the prices correctly, I don't need to even read a single news article. It's irrelevant to me. right? I only need to know the news that's coming. Like, for example, I know when the halving is. I need to know the known unknowns, right? I don't care about the unknown unknowns. Most news is unknown unknowns. Like, no one knows that what India is going to say. No one knows what Korea is going to do. No one knows what China is going to do. I did know when the ETF decision was going to be announced, and I had 95% confidence that they were going to reject the ETF. So I advised everyone in these videos accordingly how to play that trade with the expectation of the ETF being rejected, because I had full confidence that it was going to be rejected, unlike the majority of people that had no clue and they were like all 50-50, right? Now, the halving that was coming up and the halving that is going to come up, that is, again, that is a known unknown, right? Like, you know when the news is going to be. You just, actually, that was a known. Like, you know exactly when it's going to happen, and you know exactly what's going to happen. So I have to advise everyone, for free, by the way, how to play that scene accordingly, and go back to the videos of the halving where I perfectly explain it. Played out exactly like I said. What other piece of news that's like that that's coming up that you need to be aware of? Well, it happened during the hard forks, right? Except the unknown happened of the 2x cancellation. So that kind of screwed us up a little bit, but again, I was calling for that high. So anyway, so the weekly chart like remains bearish, and like you don't know where this candle is going to end. So we just wait. Here's the daily chart. I mean, now the Bitfinex and Bitstamp are deviating quite a bit. We're 8,500 on Bitstamp. We're what is this? 8,800 on Bitfinex. And when you, I don't even think we're gonna, like, let's put it this way. Like, this shit collapsed even earlier than I expected. I was given it at least some benefit of the doubt for a little dead cat bounce that didn't even come. So yeah, sure. I mean, I don't mind that haters are going to say how wrong I was looking for one final dead cat bounce before a complete annihilation of the price of Bitcoin. And the chart is telling me that has nothing to do with the environment, has nothing to do with anything. I worry about the empty mempool. I don't even know, like, anyway, like I said, I don't even have the mempool chart up. Anyway, so what are we looking at here? Well, this is simple. The triangle has broken down. Symmetric triangle, descending triangle, whichever triangle, fits your, whichever triangle peels your banana that you were looking at is breaking down. So the target for this triangle is actually pretty damn simple. The height of this triangle, what is this line? 12,500. What is this line? 10,000. So that's a $2,500 fall. So where do we break down? 10,000. Sorry, guys, had to sneeze. Hold on. Okay, cool. Back. So where did this triangle break down? This triangle broke down just at 10,000. Oh, that's another thing I'm going to say. And now we're looking for a $2,500 fall. Now, how fast can this fall come? Well, remember, I showed you, I went back to 2014. The last time I had a similar triangle, I even wrote articles about it. And this should usually take about a week, right? So we should hit this spot within a week, right? Maybe we'll hit it today. I have no idea, right? All I know is this is my target. That's it. Like, can we bounce back to 10,000 and then go down? Of course we can. Okay, absolutely we could. So, this is where, I mean, I'm just giving you the general, right? Like you as a trader need to decide when to enter and exit these trades. According to the time indicator, this was the short, but I advise people, hey, you got to be careful with the short because we just fell so much. But once we went back up a little bit and then we started to break down out of a triangle again, there was definitely time to short. And let's go to the 4-hour chart. Can the 4-hour chart help you short? Oh, yes, it did, right? Because look, here was a 9 telling you to, be careful on the upside. Here was a 9 telling you to be careful on the downside. I was looking for a 1 to 4 candle correction and then down, okay? And look what happened. We just did like a 1 candle correction, and then we started to go down. The moment the 2 started trading below the 1, there was always a chance to short the asset according to this indicator. This was a 9 for a minute, we went up. I thought we had the mustard between the daily chart and the 4-hour chart to go up a little bit before the complete drop, but we didn't. So once again, the moment, I mean, this would have been a rough trade. I mean, I wouldn't blame a trader for being cautious. I mean, technically, this was a base. And the moment this base broke, there was a short trade on the table. But if you wanted to be cautious, your short trade would have definitely should have taken place the moment the two started trading below the one. This is my standard entry for a short. Couple of things going on here. Once this 9 came and we could not muster a full reversal, you can now trade the countdown. These are the 1, 2, 3, the bottom numbers that go to 13. Now, there's also an aggressive 13 that kind of gives you one more chance for a bounce, and they have been somewhat decent in the past, these aggressive 13s. So on this current 4-hour candle, you just have to be careful a little bit. If you were in a very profitable short, you may want to take some profit here because of this aggressive 13 and a green arrow. And if you start to see more weakness, you can always get back into the trade, okay? And we're still looking for the actual sequential 13, the countdown 13, to potentially stop the slide that started from this 9. This is the 4-hour chart. Again, remains fully bearish, no reversal candles on a 5 of 9, on an 8 of 13. Like, it just gets uglier by the hour. Speaking of the hour, here's the 1-hour chart, and this is where the aggressive 13 gave you a little bit of a bounce right into the bullish 9, giving you a red arrow. It's an orange arrow because it's not perfected. Again, please go to my website. Go to Learn Trading. All of this is explained in section 6 of Learn Trading. This indicator was fully explained with dozens of links. There's like a month worth of homework here. But if you're not an expert at section 1 to 5, section 6 is gonna look, you're not supposed to, you can't trade like an expert until you've survived, getting your hands dirty in the original way. People asking me, am I ever going to teach people options? I don't know. Maybe in about 3 years, when Bitcoin traders, grow up and become real traders, I'll teach the survivors, like the survivors of Bitcoin trading, like after another bear market or two, right? Like maybe in 3 years, when I feel like I've exhausted the pool of introductory seminars, I'll start to do advanced seminars on option trading, but I'm not going to teach it anytime soon, basically, is what I'm saying. I survived the traditional trading for 10 years before I made myself. I mean, I kind of started with options. I went right into the deep end, but I spent enough time in traditional trading to survive that before I moved on to advanced stuff. Okay, anyway, back to the hourly chart. So this 9 helps you time the top, just like this aggressive 13 helps you time the bottom. Where is the short trade on the hourly chart? Well, the red 2 never trades below the red 1. Then you get a price flip. 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 So where's your short entry? Well, finally, you have a red 2 trading below a red 1. Boom, there's your short entry. Where do you take your profit? Well, right there. You have a 9 buy telling you, hey, your short trade might be exhausted. So once you start seeing these green candles, you're like, hey, you know what? Maybe I'll take a break. When do you get back into the short trade? Well, if you're an aggressive trader and your 4-hour is bearish and your daily is bearish, well, you have a 3 trading below the 2. So boom, you're back in the short trade. Would you still be in this short trade? I don't know. The answer is maybe, because where would you set your stop loss? A conservative, there is really no swing high, right? So where's your stop loss? There's a conservative stop loss right here. If you set a conservative stop loss, you got stopped out. If you set any kind of other generous stop loss, like maybe above the prior high candle, like the 7 candle, then you're still in the short trade. If you gave it a bunch of wiggle room saying, hey, I'll wait till we get back above the 50-hour moving average, right? Then you're still in the trade. If you got stopped out, this candle right here is a beautiful doji after a bounce. And again, you can either get back into the short trade below the doji, but price flip. So you can be more conservative and get back into the trade either down here, but again, it's a price flip. So boom, you're back in the trade now. Now you are, again, a red 2 below a red 1, and you're having this hourly double bottom. And you know what I always say about double bottoms. And I'm about to get to that 10,000 in a hurry. This right here. You had a bottom. You're working on a lower bottom. I mean, you could have a bounce, but this thing is going down. Now, here's something very, very important, okay? Everyone, and I'm going to call a lot of people idiots on this video. Sorry, guys. You may be a friend of mine. I may respect you. I don't know. I don't pay attention to what anybody else says. But what I saw generally is an unreasonable amount of people talking about the 10,000 being, what do you call it, a base. 10,000 is the base. 10,000 is the base. How many times do I tell you on this video, there's no such thing as a base? The more times 10,000 acts as support, the shittier it gets as support, and it's going to most likely break down. So any trader that talks about, oh, we just fell 50% and we're forming a base. No, that's not how trading works. That person knows nothing about trading, nothing. Things don't bounce off a base, okay? I mean, the only counterexample to that is maybe gold between 1998 and 2001, where gold formed a base at like $200 to $250 for like 3 years. Like, if you're gonna form a base, it needs to be like multiple years to the point where the base is ignored, okay? There's 2 ways markets reverse. One of the ways it reverses is like this. Like what happened when we fell to 5,000, 5,400 bucks. You reverse, you have like one day, what am I saying, one day? You have like 1 hour to hit the bottom, 1 hour to time your trade. That's a reversal right here. Back at 3,000, when we fell from 5,000 to 3,000, you had 1 hour, maybe even 15 minutes to buy the bottom. There was never a base at $3,000. The market didn't give you 3 days or 3 weeks to think about entering at the bottom. That's not how things bottom. This is how things bottom. Right here in July of this year, when we fell to 1,800, you had like 15 minutes to buy the bottom. The market didn't give you 3 weeks to think about it, okay? You get like 15 minutes to an hour right here. That's how things bottom. When you start forming a base, it's going to collapse. When you start forming a base, it's going to collapse. Any trader that talks about a base, they don't know anything. They don't know anything about trading. They need to go back to school on trading. Like I said, if you want to talk about a base reversing the price, it needs to be like a 3-year base to the point where people say this asset is totally useless. No one uses it. No one cares about it. I'm not even going to look at it again because it has no volatility. It's never going up again. It's never going down again. It's just going to stay there. Now, gold did that between 1998 and 2001, and then it went up from the base. That's a base, okay, where you have multiple years to forget about the asset, okay? Otherwise, when things bottom, they go up so quickly. And look at the stock market in March of 2009. Same thing. You had like 3 hours to buy the bottom. That's it. Not even 3 hours. Anyway, that's my rant on that. Okay, sorry, Brian. I know you put in a very generous tip and you said something. Let me get to that. Tone, at some point today, could you look at the longer-term chart and give us your best long-term guess at a maybe 2020 price? I'm sorry, Brian. I honestly can't. Like, I would need to do a lot of thinking. I would need to look at a really long-term chart. I can't do that until I call a bottom for 2018, and I'm not ready to call a bottom for 2018 yet because I don't know where it's going to bottom. So I need to look for a bottom at for 2018, and then we can talk about projections for 2020. Now, fundamentals are telling me that we should be in the vicinity of $50,000 to $100,000 before then. But like, Bitcoin is so unpredictable. I never thought we would hit $20,000 a Bitcoin in 2017. In the beginning of 2017, when Bitcoin was like $700, I predicted we would go up to 3,000 in 2017, and then I raised it to 7,500 when we were hitting that 3,000, and I thought 7,500 was it. Once it went above 7,500, I kind of almost gave up on predicting. I tried to predict one more top in 2017, and that top was here when you had a 913 on the same day in the 10, 11,000 zone. And this was very tricky for me because of this prior candle that kind of spiked. You can see it here on 1129. And then I tried calling a top here on 12.3. And then I had to tell people to get back into the market for longs once we went above that. And then I had problems calling the $20,000 top. Now, in hindsight, it should have been easy. It was the day the CME started trading, not because of the CME, but because of the hype that led to the CME, which I've talked about many, many times on other podcasts. Okay. All right. What else did I want to get to? I know I have like 1,700 viewers. I stopped looking at the live chat. I do have a friend helping me out with questions. They are coming in. All right, let me take care of another tip question. I don't know how long you guys are going to stick around. Head and shoulders on crypto market cap from 12, 13, 17 to now. I don't really care much for head and shoulders. I'm not really a head and shoulders guy. Sorry. Next from Chris. Tone, you were right. You saved me a lot of money. Thank you, Chris. I mean, look, people are going to blame me for crashing the market. But hey, so many people are like doing the opposite of my trades, and they're so happy. So I really hope they did the opposite of this trade, and I hope they're really, really happy. Look, it's not me, guys. I don't cause a market drop. Okay, so a couple of things I want to talk about. So first of all, oh yeah, I'm not going to talk about Tony Robbins on this video. We'll talk about it after. So Maverick, so he PM'd me a couple of tweets, a friend of mine, and so he's defending me. Okay, so do we want to talk about Andy Hoffman first or Ronnie Mose first? Okay, so let's talk about Andy Hoffman. I don't know what Andy Hoffman's been saying, guys. I haven't been paying attention. I know he's upset at me for talking about the empty mempool. That's fine. That's a difference of fundamental opinion on Bitcoin. He may be upset at me for, or I don't know, but I like Andy Hoffman. Me and Andy Hoffman get along. Like I mean, he's from Brooklyn like I am. Like I don't get mad at him. Him and I will definitely hang out for a beer and drink. Last thing I need is another drink. But so me and Andy Hoffman get along, right? So like I just don't have time to look at his criticism and reply to it because I honestly don't care. I do my thing to the best of my ability of predicting the price. And if people don't like it or it messes with their portfolio strategies, that's not my problem, right? People are now upset that I have so many followers on Twitter that I influence the market. That's not my problem. I had less than 3,000 followers like a year ago. Now I have over 110,000 followers. Why do I have those following? Because people trust what I say. They know I'm not going to, like if I have 10 million followers, it's not going to change what I do. It's not my problem. It's your problem. I'm going to continue to be me. And if you don't like it, mute me, okay? Mute me. Don't block me, okay? And this is where we're going to get to the disaster known as Ronnie Mose. So Ronnie Mose has me blocked on Twitter, right? Now, you have to understand what that means. So because he has me blocked on Twitter, when he criticizes me, I don't see it at all. Even if he tags me, I'm not going to see it because he has me blocked. So when people reply to Ronnie Mose about me, I don't know what they're replying to. So if you want me to see the reply, whatever Ronnie Mose said about me, because he blocked me, because he doesn't understand trading at all. So because he blocked me, there was like, I don't know what criticism you're replying to. So there was something in Cointelegraph that I said that Bitcoin was going to 100,000. This year, I never actually said that, right? Now, how much time do you expect me to put in to contact Cointelegraph and tell them to change their, graphics? Like, I don't care, right? By publications printing shit I never said, it's good for me, right? Because if I'm right, I will say, hey, I got it right. And if I'm wrong, and people want to call me out on this, I'm going to say, hey, why don't you ask Cointelegraph where they got that? Like, please show a text message from me to them that I said this to them. Please show an email from me to them that I said this to them. Please show me the quote. And they will not be able to do that because I never actually said it. Now, if 50 publications publish bullshit, like some publications still like attribute me to, let's say, Brave New Coin, where I was for like 6 months over a year ago. Like, how much time do you expect me to spend correcting that? That's not my job at this point, right? Like, I got shit to do for you guys to make videos, right? So if publications are printing, and this is the core developers have the same problem. How much time should they spend, shutting down lies versus actually working on Bitcoin? Do you want them to spend all of their time debating big blockers and not having any progress in Bitcoin? And that's the thing, right? So here's the thing. Here's why Ronnie Mose has me blocked. Because Ronnie Mose did something that, well, okay, hold on a second. So Tone Vase, I'm just gonna Google myself on YouTube, right? So I don't want to like even promote other people. So where are they? I mean, oh yeah, this Joker, right? So I don't know who the hell Sunny Decree is. I've never heard of him until like 2 days ago. But a bunch of people sent me this video from Sunny Decree. So I actually looked at it and checked it out. And the first thing I did as I was watching this video, I clicked on show more in his description. And what I see is affiliate codes for Genesis Mining and BitClub. These are, I don't even know what Cloudflare is, and I don't know what this is, but my guess is these are all cloud mining. There's only one way cloud mining is going to end, and that's they're all going to end as a Ponzi scheme. They have to. They absolutely have to. It's the way cloud mining works. All of these companies will eventually end up running a Ponzi scheme, okay? It's because of the way the affiliate network is set up. And I'm not surprised where, oh, I guess he pinned my reply. Excellent. Right, well, I mentioned the cloud mining. So the thing is, here's the best part, right? So BitConnect. Perfect. Not long ago, you were shilling BitConnect with your affiliate links. Now, that's all I need to know about this person. All I need to know about Sunny Decree is that the man is a joke and is a scammer and is a liar. Because if he was shilling BitConnect and then removed it when BitConnect turned into BitConnect was actually a Ponzi scheme from the beginning. BitConnect didn't turn into a Ponzi scheme like Genesis will and BitClub will. BitConnect was a Ponzi scheme from the start, and him not being able to recognize the fact that it was a Ponzi scheme from the start means the man is either a complete fool or he's a scammer. I don't know which one is worse when you're a YouTuber. Are you smart enough to scam people and admit that you scam people? Then I can somewhat respect you a little bit. But if you don't have the mental and IQ capacity to understand that BitConnect was a Ponzi scheme and you were shilling it, why does anyone watch his videos? Okay, so that's all I'll say about Sunny Decree. So what Sunny Decree did was he picked out a couple of my calls. He cherry picked a couple of calls that didn't exactly work out, but statistically, I was right to make those calls. So Ronnie Mose did the same thing on Twitter. He cherry picked a few of my calls that statistically were supposed to work out, but didn't, because trading doesn't give you 100% calls. So I referred to Ronnie Mose as my personal free intern, and I asked him to continue to do his job and please provide stats on all of my public calls. He didn't appreciate that very much. and he ended up blocking me on Twitter. So let me, so sticking with that, right? I'm gonna pull this up. So because this is my traditional trade, okay? I hope you guys are sticking around for this. You know what? Let's glance at the price of Bitcoin because I've already gone off on a tangent. Weekly, no end in sight. Um, uh, what do you call it? Daily, no end in sight. But you have a, but at least you have a target, right? At least on the daily chart, you have two targets, right? So you're on 4 of 9 and 7,500 from the traditional trading triangle, okay? 4 hour potential minor reversal, but 5 of 9 tells you we're going down, 8 of 13 tells you we're going down, right? So more bearish than bullish. 1 hour, I mean, this is bad. I mean, going below this yellow line is bad. That means this reversal wasn't sustainable. Yeah, 5 of 13 on the countdown, 3 of 9 on the setup. Everything's bearish. Everything's bearish across all time frames. I mean, if it reverses right here, it's possible, but statistically, there's no end in sight right now. That's all I can tell you, okay? Because I just go by statistics. That's all trading is statistics, okay? So let's get back to my traditional trade, okay? So I tried to dox myself. Like I even like removed the value of the trade, but then I realized anyone that actually understands options can like back out the market value of my trades, and you can literally anyway. That doesn't really matter. At least you don't know how much is in my account. Anyway, I probably shouldn't even show this. Okay, so because people think I'm a liar, I'm not. I have nothing to hide. Okay. Anyway, well, we'll talk about this in a minute. So here's the thing, right? So Ronnie Mose prides himself that all traders are idiots. And the only thing you need to do is to diversify your portfolio as a buy and hold, which is not a bad strategy. It's actually a good strategy, okay? I recommend buy and hold unless you know what you're doing. If you are a professional trader, if you have learned, if you've studied, if you have experience, yes, you will probably not beat the market your first 10 years. But if you're learning with every mistake, eventually you can get to a point where you are crushing the S&P 500 returns, when you are crushing the benchmark year after year after year. You can get there, right? But it's not easy, okay? So Ronnie Mose doesn't understand that concept, right? And all of the people that go public head to head against them, they lose because guess what? A real trader, I would never go public head to head against them, okay? First of all, I don't want to waste my time. Second, the only way, I mean, maybe one day on CNBC, we can do a challenge. And you know what? And if I win, I would, my conditions would be if I win, if I outperform, if I triple his performance in 12 months time, he has to like quit public life. Basically, that would be the condition, right? But I may not even want to waste my time because that would be like I don't need to prove anything, right? Like I just don't. But here's my traditional trade, right? So so the S&P 500 on average makes about 11% every year. On a good year, S&P 500 will make 20 to 25%. The last couple of years, S&P 500 has made 20 to 25%, okay? This has been my one and only trade this in Q1. I will not make another trade until May. The next time I make a trade will be in May. Okay, now this trade is almost over. So here is the entry to my trade on Friday, January 26th. This is one stock. I'm of course not going to show you the stock. You can kind of see that it involves puts and it involves February. Maybe I probably shouldn't have even said the month, right? And you can see that it involves more puts, okay? So it involves some puts, okay? And some of the and February. That's my screw up. I should have not shown you that, but too late. I shouldn't be showing you what month expirations I'm using here. But anyway, It was the front month. Sometimes I go further. It depends. It depends. And I didn't even have time to research. As you see my travel schedule the last 3 months, right? I mean, this trade should have been better researched. This trade should have been made me more money. Okay. So I broke up the trade for liquidity purposes into 3 different parts. And these 3 different parts had different, like, they had different strikes. Let's put it that way. And because they had different strikes, they cost me different amounts of money. So I could have bought a lot more at a cheaper price or less at a high price. So I mean, again, like I said, I didn't research this all that well. Okay. So you can see that I had a trade of the size of 30 and I paid an average price of $16, right? But notice this is in the options market. So, I mean, this is why only like a handful of people will be able to back out my market position here, okay? The reason why I'm not showing you how much money is in my account is because some people will think it's a lot and some people will laugh at me and think it's a little, right? Because everybody's different. So in order to avoid controversy, I'm not showing you how much money is in my retirement account. This is also my retirement account, so I can't even touch this money for 20 years. So yeah, so if I'm getting kidnapped, you can't get this money. I legally can't take it out. So for tax purposes, this is my retirement fund, okay? But at least it's in the thousands, not the hundreds, right? You see a little K right there. And this doesn't mean that it's like 8 figures long, right? Like you don't know where the number's at. So, but it's not that much. Like I can clearly say it's nowhere near $1 million. I'm not that rich, guys. It's my it's my 401k, right? And I stopped working Wall Street a while ago, and I was a gold bug that believed in gold. So I wasn't even funding my 401k much. Anyway, long stories. So I entered this trade in 3 different combinations at 16, at 11.28, and at 7, right? Now, I paid a hefty commission for these because these are multi-legged, complicated trades, okay? So a couple of things you can see here. So I started exiting. So this is the big one. This is the one that was most expensive at 16, and this is the one that it's again, it's option pricing. This is I'm not going to explain it to you, but you got to look at percentages, right? So this was pretty hefty. Let's put it that way. 30 options at 16, that's a lot on the combination spread. Well, big spread. I think this entire trade cost me like hundreds dollars in commissions, like hundreds. And I'm with a pretty damn cheap broker. So I enter at 16 at 30. You can see that I have fully exited that position. This is like my current portfolio, and all I have is 10 positions left of this middle one. I tried to exit it at 13, and you can see how I'm the market. This is the problem. This is why I have to break this straight up. No one does this but me, okay? This is like, I'm literally, this is when the market closed. There wasn't even a bid. It was just me asking for 13, and I didn't get filled. But this was at the end of the day, right? Like I got greedy. I got greedy here, okay? So I have 10 positions left. So what you don't see here is the other 10 positions of this trade. I exited at 14 and at 15. So we can do the math in a minute, right? So so I exited half of the trade at 14 and 15. So let me I have a little math formula here. Again, I dropped the stock. So that middle trade, I'll put it in the middle, right? So I enter it for 7. There is commission, put 4 cents. Again, all of this gets magnified because options are so leveraged. My exit, I exited half at 14 and half at 15, if my memory serves me right. So that's 14 and a half, okay, on half the trade. So, oh, I'm sorry, not 7. My bad. I messed that up. That was the 11.28 entry. The 11.28 entry. That's the one. 11.28 entry. Yeah, because I didn't make 100% on any trade. So this trade, I exited half the trade with a 27% gain in less than a week, right? So my entry was Friday. My exit was my final exit. I wanted to exit all of it. Like I didn't want to deal with the shit tomorrow night. Like it's Friday night. It's the last day. I wanted to be gone. Like I spent up all night last night, by the way, like trying to exit this entire trade. And because it's night in Asia. right? That's the thing. I was literally up till 5 in the morning here in Singapore waiting for the stock market to close. All right, so I didn't get like any sleep last night. So, but again, this goes to the people like Ronnie Mose that think that it's impossible to beat the market. And this is why I'm even showing this, right? And again, Tony Robbins is helping me by being in this seminar. Like, I should be happy. Like, you know what? I'm glad that Ronnie Mose is going after me, because maybe somebody can show him this video and he can see what I did with one trade this quarter, and I'm going to do it again in 3 months, okay? Because this is an earnings play. It's an earnings play, all right? So here it is. I tried exiting the last 10 at 13 because it turned at me. The market turned at me. Like, I got greedy. I got a little greedy, right? Like, I could have exited all of it at 15 or 14, but I got greedy because that trade was looking really good. And I wanted to get out at like 16, and then I had to lower to 13, and I didn't even exit. Like, I wanted to exit yesterday, but I didn't. I wasn't going to go lower than 13. Again, I got greedy. So this trade was a 27% gain, okay? Let's look at the other trade. My other trade, let's look at this cheap trade, right? This was the $7 entry, right? So this is the cheap one. This is the $7 entry, right? And you can see that I've exited all of it because it's not in my portfolio anymore, right? This is just like all of the ones. You see, position is 0, 0, 0, 0, 0, right? And these are like the individual options and stuff. So anyway, so I entered at 7. Now my final exit right here, see 5 of them, right? So, and these are the, like, this here and this here are the same. This is just the orders, and this is the trades. So this is the orders tab, the trades tab. You can see these 2 were canceled and those 3 executed. So this one, and this one were all executed, and here they are, and here are the timestamps, right? This is yesterday's exits, or like 6 hours ago exits, the middle of the night here. So I finally exited at 850. So half that trade was exited at 850. The other half was actually exited, I think it was at 10 bucks. Like, because this option combination doesn't exist, my broker can't actually tell me what my other exits were. And because I'm terrible at keeping my own stats, like, I just see, like, me making money. Like, I don't like keep track of my own like actual portfolio. So I either exited at 9 or at 10. I think I exited at 10. I think I set like a very generous sell on this one, because even though it was cheap, I had, like, if the market would have moved with me, anyway, I got greedy there as well. I think I exited at 10, but like, I'm gonna give. No, I'm pretty sure it was 10. The first half of the trade, but you can see the second half of the trade was at 850. So I'll make it 9. I'll even go a little lower, right? So, oh wow, that's also a 27% gain on that trade, minus commission, right? So here's the commission, right? So there's some commission there. So I entered at 7, I exited at 9, right? All of it's gone. This one, only half of it's gone. So the other half, by the way, I can lose it all, because now it gets trickier. Like, I don't want to hold it into Friday. Like, that shit gets weird with my setups and stuff. So half of this trade exited at 27%. This entire trade, I think it exited even higher. I think this really should be like 9.25. But anyway, 27%. Let's talk about the big boy trade. This was my biggest trade, right? So you can see that my average was 16 and 01. That's the commission and stuff. And on 30 positions, so that was 30 positions. Oh wait, I'm sorry. This was 10, and I exited half, right? So assuming the other half goes to 0. Assuming the other half goes to 0, I will lose 36%, right? But even if I sell the other half break even, even if I sell the other half at 11, I'm looking at a, oh, it's not calculating that math. Why not? How do I adjust the formulas here? Anyway, oh, okay, 5. That's why it's not calculating. Right. So even if I sell the other half at 11, back at break even, I make 12%, right? But if I go the other half 0, then that. Okay. So this was 20, and I sold 10 of them. Okay, and I still have 10 to sell. So I'll let you know what price I sell the others at. here is this one. This position was 10, and I sold 10. This position was 30. I sold all 30. Let me talk about the price. So the entry price was 16. You can see that my final exit was at 20 right here, right there. My final exit on that trade was at 20. I sold 15. I sold 5 more early in the day when the market opened at 9:32 for 19.50. Okay, so that means that 20 being sold, and I'm telling you, you don't have to believe me, but the day before I sold the first 10 of this trade for 19. So I kept going up in my sale value, and this one actually worked. And I was trying to even get more, right? So 19, 19.50, and 20. So let's split the middle. Let's say I got 19 and a half for it, okay? Which I got a little more, right? So 19 and a half, and I'm lowballing, right? So that's another 21% trade, okay? 21% trade. Now, I am so confident in these trades that I'm really pissed that I did not enter my entire account balance on this one trade. I'm really pissed I didn't enter my entire account balance on this trade, right? I entered, I don't want to say, because an options trader can back out how much money was in the I had in the market. So I don't even want to say what percentage of my total market portfolio was in it, but the rest of it was in cash. That's the thing. This right here, USD cash. So the rest of it, this is me. This is when I entered. This is the only trade. And once I exit these 10 later tonight, in the middle of the night in Singapore again, so I'll be up again. I'll be fully out, and I will not look at any trading until 3 months from now, where I'm probably going to do the same trade, maybe on the same stock, maybe on a different stock. I have to do a little bit of research which one is best. Okay, so right here in 5 days, I made 20% on a trade that I should have put my entire account on. And I made over 20%. Again, there's some pending, this one is still up in the air, right? Because half of it is still open, and it can go to zero, because this is, my shit is very complicated and tricky, right? So there you go. So people like Ronnie Mose don't believe that I can do this every single quarter, but I can. Now, it doesn't scale. I will not, if I put $1 million on this trade, I will not break 20%. I can guarantee you that, right? Now, granted, this doesn't scale to millions and billions, but there are other stocks. And if this is all I did for a living, I can do this same trade in a better way, where I'm watching the market every second, and I can find another 20 stocks to do it on. And with a big enough portfolio, with a big enough diversification, and I could have actually entered this trade in like 8 different ways by organizing the option strikes as well to spread out my liquidity, right? Because I don't want to be the only ask. That's not good. This is why I couldn't exit the rest of my trade, because I became kind of the market, okay? So there you go. So this is traditional trading. Now, it took me 10 to 15 years to develop something like this. And trust me, I lost a lot of money getting to this point, okay? And this is what I care about, right? I spend literally like so little time on this. And trust me wanting to stop doing these videos and perfect this to the point where I can write a book on naming a brand new option strategy is crossing my mind, all right? So I don't know how much time I spend on this, but I think it's more than enough. Let's get back to Bitcoin. Looks the same, looks the same, looks the same, and looks the same. Like it's all bearish. It's all bearish, guys. All right, let's get to your questions. Time for Q&A. All right, so there you go. I probably divulged way more information than I should, and I don't look. It's fine. Like I'm gonna be happier with the haters, because hey, they're promoting me, right? They're promoting me, and I can back up my numbers, and all my statements are public. All my videos are public. All right, let's look at your questions. Is a V-shaped quick recovery likely, or does the price stay around 7,500 level for extended? Wait, hold on a second. I have to. There's again, Why is there always like grass cutting or stuff? Let me close the balcony door. Hold on. And I'm mic'd up, so I have to take the mic off. Much better. No more wood chopping or grass cutting or wherever the hell it is. All right. So here's the question, and I kind of discussed it during the video. Is a V-shaped quick recovery likely, or does the price stay around 7,500 level for extended period of time? Again, unless that extended period of time is 6 months to where people get bored of Bitcoin, it has to be a V-shaped quick recovery. And if the price, let me go back to screen share. This is what I try to teach people, guys. If the price falls to 7,500 and keeps bouncing off of 7,500 the way it kept bouncing off of 10,000, I'm going to draw another descending triangle, and I'm going to put another target down to 5,000. Like, this is what I try to teach people. Like, if you have way too much time to think about buying the dip, it's not a dip. It's going to keep going down. Okay, this is the educational part of this channel, not follow the leader, right? Like, my point is for you to learn how to trade, and you survive this shit, and then you start coming up with strategies that work only for you, only for you. All right, next. RSI, MACD, Bollinger Band, and all indicators so grossly oversold, it doesn't matter. Doesn't matter, okay? I've talked about this before. How can we possibly fall back to 7,500 from here? Seems like the move is overdone. How did things get so extended? I don't know. You tell me. Let's pull up a chart of, I don't know, Amazon. I still like stock charts. I can't deal with like, I still can't get my brain used to using trading view for traditional stocks. Okay, let's look at Netflix or Amazon. Which one? Amazon. Look at Amazon. Amazon. Oh, look, the daily RSI has been overbought since $1,200, and then it went to almost 1,500. And I think it just beat earnings last night, so I think we're going to like 1,500 and above. Okay. How can I see the pre-market price of Amazon? Hold on a second. I think it reported last night. Yahoo Finance. Amazon. Let's see, where is it going to open today? Boom, plus 87 on earnings. And then the stock fell $60, right, yesterday, and then it beat earnings. So it's going to open close to 1,500. I wouldn't be surprised if it breaks. I wouldn't be surprised at all if it breaks 1,500, right? So the moment it breaks 1,500 on a daily chart, it's going right back in there, right? Now, technically speaking, now because of earnings, right, this one bad day has taken Amazon out of overbought. But if you just take this one bad day out, and it's the day before earnings, so no one should have acted on this. So when RSI goes overbought, it can stay overbought indefinitely. It's not a short trade until after it breaks breaks back out of the oversold condition. Same thing on the overbought condition in this case. Same thing on the oversold side. Now here's Amazon again. Again, it went overbought on the RSI, like off of this earnings announcement when it broke 1,000. Look how long it stayed overbought, all the way to 1,200, 20% more, right? So, and imagine if I go to the weekly chart. I mean, look, again, things can stay overbought indefinitely, and Netflix is going to be the same thing. You know, well, maybe not as much. I don't know. What about SPX? Boom, S&P 500, right? I mean, It can always go higher. Same thing with MACD. It can always go higher. Same thing with Bollinger Bands. This is why I do not. I only like those metrics for things like divergence. I'm not a big fan of these things for like if things can always get more oversold. Things can always get more overbought. You have to wait for the reversal, and the reversal doesn't come because of these momentum indicators. All right, next. Do the fundamentals matter at all, and can they help reverse the price at all? Yes, absolutely. So here we go, right? So let's talk about the fundamentals reversing the price. Right here, right here. When, nope, not there, sorry. Here. Was it here? One of these things. When was this? This was November. No, it's no good. I need to go back to here, right? Boom, right here, right? So the weekly chart, oh, this is why I'm not looking at the weekly, right? So here, when I called the $3,000 top, like literally to the day, and we had this bad 3 candle, like we have, a bad 4 candle now, I was looking for 6 more weeks of downside. And it was the fundamentals that reversed it, because this is where the user activated soft fork. Literally, people came to the realization that the user activated soft fork is going to win, the UASF. I was part of that movement, a little late, but I was there, okay? This is the fundamentals reversing the market. Now, on a weekly chart, it looks like you had plenty of time to decide. On a daily chart, I was able to call this bottom off of the 9, off of the reversal candle, off of the trend line, and I wasn't looking at this moving average at the time, but I wish I did. I think Willie Woo is the one that informed, was the one that was pitching the 128-day moving average and how useful it was. Okay, so I was long here on the daily, but only short term because I was going against the bear weekly. But this giant candle right here, and here's my green bullish, like saying, hey, this is bull. This giant green candle, like I was looking for a 1 to 4 day bounce and then lower. This is back in July of when the price hit 1800. This is fundamentals reversing the market, but we still had a clean, V-shaped recovery. But this is fundamentals, right? So I'm not sure what happened here. Like I don't remember what the fundamentals were here, right? But right, of course, fundamentals can also derail the market, right? Like like here, where were we? Like the ETF stuff, like when the like here, this candle here, this is in March of 2017 when the ETF came, right? So we already reversed. So I already called a bear off of this 9. Well, actually, the 9 didn't even exist. I wasn't even looking at it at the 9, so I wouldn't have called that. But I already, based on fundamentals, sorry about that, I would have called it off of this 9, but I wasn't looking at this indicator back then. So the reason why I was already like telling people like to get out at 1300 was because I knew that the ETF was gonna be a disappointment. I knew that they were not gonna allow the ETF because it was obvious to me. So that was a fundamental event. But look, it made a new high and then it made a new low. Like it killed everyone this day. My advice was to get the hell out of the market. Don't trade this day because it was going to be wacky, and it was wacky. Okay, so this is fundamentals, and over here. A few days later, on the 16th, this is where the realization came that Bitmain is joining the big blockers, right? So SegWit versus BU Panic. So this is Bitmain talking about how they're not going to support SegWit and how they're going to go with big blocks. And they created ABC and all that other crap, right? So this is, again, this is fundamentals derailing the market, right? They can do that, but you don't know those announcements are going to come. So you trust in your technicals. At least I do. You guys can do whatever you like. All right, next. Man, I'm gonna probably miss the entire day of Tony Robbins today, but that's okay. I have my own stuff. All right, next. After we bottom and start to heal, can you estimate how long it may take to challenge the old highs? No, I can't. I can't, not until we bottom. I just can't estimate that. Not until we bottom. Like I did a really good job calling the price of Bitcoin all throughout 2016, right? You can see my, let me zoom out. Let me do this. Let me zoom out. You can see my channel. You can see the purple channel. Let me drop this and open that. You can see the purple channel and the ascending triangle and all this other stuff. So you can see how I was calling the price of Bitcoin after I had, and I didn't get the bottom right here on the downtrend. A long story. Go back to my old work. I explain it all. But I did a really good job calling the swing ups and downs each step of the way on the way up. But after I had already conceded that the bottom is in, and I don't know where the bottom is going to be in. Like right now, my target is 7,500, but I don't know if that's going to be the bottom of the market. Like I have no idea. We can easily go back to 1,300, which I still say is possible to this day. All right, next. Which exchange would you use if you were going to trade Bitcoin for profit in a legitimate way and pay taxes like a traditional account? I'd probably use BitMax. Now, of course, BitMax, you just have to report your own taxes, right? I mean, paying taxes when it comes to Bitcoin is an honor system, right? Because you can trade Bitcoin anonymously, but then report it to the IRS that you've traded Bitcoin and this is how much you've made. So if you ever get audited, you can prove that you've paid all of your taxes. So I would probably use BitMax, which is why I have an affiliate code for BitMax. Time to show the affiliate codes. Yep, it's happening. So go to the affiliates and referrals. I still don't know why my website isn't rendering properly, but here's BitMax, and you'll save 10% on commissions with an affiliate code. I'm also, again, wearing the Buy the Dip shirt. So there you go. My favorite gear. There it is. All right. So I would probably trade on BitMax, only because like the leverage lets me put less Bitcoin at risk and stuff, and I like them. But other than that, I mean, Gemini's pretty good. But again, see, I worry about trading at traditional exchanges because look, you have so many risks, right? Like the risk of trading at an exchange that isn't traditional, like a BitMax, is like there's less KYC there, but they're kind of regulated by other means. So, but the risk of trading on, let's say, BTCE is the fact that the government can try to confiscate it, or they can run away with your money. The risk of trading on something like Gemini is that they can get a government subpoena and freeze your funds for 10 years, right? At least with something like BitMax, I think that you'll still be able to pull your money out, right? I think they're the guys that are running it are libertarian enough in a way to kind of like get your money out. So in case shit hits the fan, right? All right, next. Hey, Tone, you recently said the worst thing for Bitcoin would be if the government decided to legalize money laundering. Well, more like decriminalize money laundering, but sure. And the best thing would be digital money. Can you elaborate? Sure. Bitcoin replaces cash on the internet. It replaces cash on the internet and in person. So as long as cash exists, cash will probably be better to use, especially in person, than Bitcoin. If there is no more cash, then every single transaction that is currently done in cash is going to be done with Bitcoin. So the best thing for Bitcoin is the elimination of cash. But if the elimination of cash comes with the elimination of money laundering laws, then people wouldn't care what they spend their government fiat on. And the government doesn't really, no one really cares how much money the US prints, because the US dollar is still pretty damn valuable. And the S&P 500 goes up with every print. So I don't really want to get into too much details on this, maybe in another video. Next. Hey, Tone. Oh, yeah, no, I read that one already. Can you decrease the price lead to Bitcoin death spiral as miners stop mining and block formation freezes? No, miners aren't. More and more miners are coming online every day. Like the hash power is just going up. Miners will mine. I'm going to mine. Hey, the more miners stop mining, the more money I make with my one miner. I have to buy a new miner. Next. How was Tony Robbins? This video is already going on too long. I'll talk about Tony Robbins in another video, and I really should get to that conference. Doji candle at the end of the trend signifies a reversal. Well, maybe, not always. I want to see a doji. It helps me identify the low or the high, but we don't have a doji, so nothing to talk about. The smart people write options. They don't buy them. True or false? False. Tough question, though. I do both. I write options and I buy options. It depends on my trade. It depends, am I expecting volatility or do I think that the volatility has been overhyped? The smart traders do both, okay? But 90% of options expire worthless, which is why it's safer to write hedged options. But if you write an option, your risk is actually unlimited. When you buy an option, your risk is limited, but your chances of collecting money is smaller. So it depends, right? Because when you say smart traders write options, if you were a dumb trader that wrote the wrong option, you can blow up your entire portfolio and not realize it. Like when I used to run risk analysis back at Bear and JP Morgan, we would run risk analysis on like an entire hedge fund, right? So the hedge fund would have like 1,000 positions across all kinds of assets, right? And like 3% of all of their market cap happened to be in writing options on a certain stock or a commodity. It doesn't really matter. Just 3% of the account was writing options. And the risk that we do like gives you like the worst case scenario. And some of these hedge funds are like, because we were a third-party independent risk analyst, and they were like, this is ridiculous. How the hell can my entire portfolio go to zero? And we're like, well, 3% of your portfolio wrote naked options. Your risk on those options is unlimited. So if another 9/11 happens, if another 1987 crash happens, your 3% of your portfolio, like if you have 100% of your money invested in like a bunch of things, but just 3% of your money in a hedge fund invested in naked puts or naked calls that you've written, your entire portfolio, you can blow up your entire hedge fund by one trader, by somebody not checking that trader, and he wrote some options out, right? So you can't say that writing options is smart, because if you write options the wrong way, you may not realize you put an entire company at risk. Or go look at long-term capital management, right? The smartest guys in the room, they created the option pricing model, and they wrote too many options, and then Russia defaulted on their debt, and the entire Wall Street had to bail out that hedge fund, or they could have like caused systemic risk across the whole ecosystem. And that goes deeper because Bear Stearns refused to help bail them out, which is the conspiracy theory was that's why Bear Stearns was the first casualty, because of the grudge from 1992 when long-term capital management failed and Bear refused to help bail them out. So it was payback for that by not bailing out Bear Stearns. And then I'm not sure how Lehman got in there as well. They let Lehman fail as well. So anyway, so no, I can't say that smart people write options, because a lot of people, I think you get the point. Next. Tone, do you use the same indicators for options that you do for crypto? No, I don't use any indicators for options. My trades are way more standardized than that. There's no indicators involved. They're direction neutral trades. My indicators are useless. Next. Tone, why do you hold your retirement savings in cash while you aren't on a position in your option trade once a year? Why not S&P or something boring? Because I'm an idiot. It should be in the S&P. I will make an effort this time to put all of it in the S&P the moment I'm done with this trade next week. Yeah, there's no excuse for that, because I'm an idiot. There you go. I don't always follow my own advice. It should be in the S&P. Sometimes it is. Sometimes I just get lazy. 1 million people waiting to get on Robinhood February 15th. What is the influx? No one cares. Out of those 1 million people, 900,000 of those people might only be trading with $100. You don't know. You don't know the market cap that's going to be trading through Robinhood. Okay. It's like saying 1 million new Bitcoin wallets were opened last month. Right. What if 95% of them were dust? Okay. If you're trading on Robinhood, you don't have a lot of money. It's the reality of the situation. Okay. I'd rather hear, like some big name hedge fund interested in Bitcoin than 1 million broke people interested in the Robinhood app. Come on, give me a break. Why do you suggest people buy the dip? Also, please show your abs. I don't have any abs, guys. I haven't been working. I'll show the picture of my abs from before Bitcoin. go to my go to my Twitter. Go to my Twitter. Show you a picture of my abs. I ain't getting those back for a while. Not until I stop doing videos in the morning and start actually working out. Where are my damn tweets? These are my tweets, my media tweets. Oh yeah, I'm doing a seminar tomorrow in the morning. I don't know how the hell I'm gonna wake up for that. Man. Where am I? Oh, Jan 4. Here we go. It was on Jan 1. Almost there. Almost there. There it is. There you go. They're my abs. There you go. There's the abs from 2012. Lost it all. Happy? Thank you for the reminder. Why do you advise people to buy the dip? I don't know. Just a cool slogan, guys. I like it. And you should always buy Bitcoin. People ask me today, when you should have bought Bitcoin? Yesterday. You should have bought it yesterday. If you're a buy and holder, you should have bought it yesterday. I mean, it's a little cheaper today, but. Guys, I don't recommend any specific trades. I'm just, that's not, you're on your own. Hey, thank you for the invite to Tokyo. Oh, at Tokyo Beat in Little Tokyo in LA. Sure. I don't know how much time I'll have, but yeah, I mean, connect with me. Shoot me an email. Shoot me a Telegram message. I don't know how much time I'll have to hang out with people at bars, but sure. This was from Alvin. Thank you, Alvin. And the bad virus. Yo, Tone. I'm currently in the process of buying a ham and mushroom pizza, and I was thinking about getting some dips. There's a choice of garlic and herb, sour cream, and chive, or spicy barbecue. I got to go with the garlic and herb, man. I like garlic. I like put garlic in all my food. Very healthy stuff. Garlic and ginger. Like everything I cook has garlic and ginger in it. Stay healthy, guys. Stay healthy. Am I still holding the gold? Yes, I am like an idiot still holding all of my gold and silver coins, the physical stuff. And I swear I will sell it eventually when I have a profit on it, because just like all the other, I got tricked by the gold bugs like everybody else. So yes, I'm still holding my gold coins, gold and silver coins. All right, guys. Oh, wait, I wasn't screen sharing my abs. Shit. Here you go. There are the abs. They're the abs from 2012. I need to get back into the gym is what I need to do. All right, happy now? All right, let's take a look. One final look at the price of Bitcoin, and then I got to get to Tony Robbins. I'll talk about him later. Weekly. Not good. Daily, any rebound? Oh, shit, I got to zoom in here. Any rebound on a daily? No, there isn't. No rebound. No rebound at all. 4 hour. You got some hope, but it's not looking good. 5 of 9, 8 of 13. And the hourly, Again, double bottom. You know, you can hold it up for a little while, but not too long, and it's done. All right. So there you go, guys. There you go. And I talked about my traditional trade, probably exposed more information than I should. But you know what? Screw it. If I get doxxed too much, I'll just quit. I don't know. I'll do something. I'll go back to trading. I don't know. I'm enjoying this. I'm enjoying the public life. But I can't get doxxed too much. It's my retirement account. Who cares? All right. Taking off the mic, and I'll talk to you all later.